Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Now, before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. It was as I said last week, and I quote, "Despite last week's dip and run lower, prices overall have continued the moving higher with a higher low last week than seen 3 weeks ago." End of quote. And we saw that yesterday for a new all-time high at 11,334, despite it being an indecisive spinning top. In all this, the main pattern here still remains the dark blue July 22 to January 23 shallow bullish shift pitchfork, which though pierced back in April this year, is still running the market higher. We are at this time in between the dark blue middle time below, currently at 10,495, and a dark blue upper time above, currently at 11,617. Moving up from the dark blue middle time below is the green short medium moving average, currently at 10,682, which might provide some additional support before any attempt down to the middle time. Now, 4 weeks ago I asked this question, and I quote, "The question, quite large question, is whether the whole action since the low in April is perhaps a very large bullish halfway hesitation. If that is to be the case, then we could be looking at potential as high as between 11,400 to 11,500 area." End of quote. This seemed a reasonable question at the time, and we did try higher in late October, though not far enough back then. The question we had last week and today is, does the market still have the incentive to try that high? And the answer, as I see it, is still the same. Possibly. You see, we were at the crossroads of two patterns last week. We could look at the whole late September to date action as a possible head and shoulders pattern, usually seen as a bearish reversal pattern, though there are bullish head and shoulders continuation patterns as well. Or do we look at the same action as a nascent bull channel? This week I've highlighted the neckline and the bull channel on my daily chart, as they are both related. The bright red neckline, currently at 10,859, is also the pierced but since repaired lower bull channel line. The upper bull channel line, currently at 11,549, is interesting, as it is right now reinforcing the dark blue upper time of the dark blue July 22 to January 23 shallowy bullish shift pitchfork. Thus the bright red bull channel is the one to watch, as well as the dark blue upper time. Plus, we can regard their recent head and shoulders as a rarer head and shoulders continuation pattern. LME 3-month aluminium. So I've stated here many times, there are a number of patterns, one within another, all happening at the same time, all affecting the market in their own way. And I had hoped they might sort themselves out, and maybe, just maybe, they are finally trying to do that. Of all the features, by far the most consistent one has been, and still is, the bright red, shallow bullish shift pitchfork for the mid-December 23 to late July 24 move. Prices are right now, in between the overhead bright red upper time, currently at 30.47, and the middle time below, currently at 27.38. There are also two supports below, the venerable 50% Fibonacci line for the November 2015 to March 22 move at 27.53, which was an effective cap back earlier this year, and the green rising short medium moving average, currently at 27.93, which had been a good rising support during this past summertime, and late last week was a key support, and by being so created a horn bottom 2 weeks ago. I said of this horn bottom pattern last week, and I quote, "If this new pattern were to work, then we could see a primary potential up in the 28.72 area, and a secondary harder to reach potential up in the 28.87 area. However, these are just potentials now, not targets, as the pattern has not been justified. And to do that, you would need to have confirmed closes over 28.30. But, as this could be a sharp move higher and happen in between my weekly commentaries, I thought it best to acquaint you with them." End of quote. Well, it was prudent of me to make these comments last week, as both these potentials were achieved during this past week, with the secondary potential only reached yesterday. Now, there are overhead and not too far away some old trendline extensions that had in the past been valid but now seem redundant. Notably the lower bull channel line for the mid-April to mid-August bull channel, which is currently at 28.93. Perhaps the steeper late September to mid-November bull channel, currently 28.75 to 30.01. I said of these last week, and I quote, "I don't rate these anymore, but I would be foolish to just disregard them. Just remember their levels," end of quote. This brings me to the analysis of the action over late October through to 3 weeks ago. This is a triple top which gave a primary target in the 28.02 zone, which was reached 2 weeks ago, and a secondary hard to reach target X1 down at 27.62, below the green short medium moving average and just above the 50% Fibonacci line for the venerable November 2015 to March 28.22 move at 27.53. Last week I kept target X1 on my daily chart, as there was back then the possibility the potential horn bottom would form a bear flag, in which case any targets on the downside would be further validated. However, this has not proved to be the case, and I will retire target X1 after this commentary and just be satisfied with the market forming that bullish horn bottom. So where does that leave us now? Well, I have drawn today a new steep dark blue late September to late November bullish Andrews pitchfork to try and show the way higher. As I say, it's quite steep, and I would have no trouble in finessing this to a shallower bullish shift pitchfork for the same move, though not just yet. The market is right now in between the dark blue lower time below, which is currently at 28.33, and the dark blue middle time above, currently at 29.45. LME 3-month lead. The key pattern here had been the original rectangle pattern that developed into the quite shallow bright green early August to mid-October bull channel. It's currently 20.06 to 20.55. This had been breached on both sides in October and now in late November. The market breached it again on the downside, enough that I no longer think this pattern is viable as a rectangle, though the bright green lower bull channel line may now still be useful as a resistance. The recent breach, and I would now say break lower, halted during the middle and end of last week at the combination of the June 23 low at 1976 and the 50% Fibonacci line for the whole of 2025 at 1971. Just below these, and I suspect also being a bullish influence, was the very important bright red neckline extension to the August to December 2024 head and shoulders pattern, which is currently at 1962. This one is very important as it held up the market in October, August, July, and as far back as May. Meanwhile, this week, with yesterday's key reversal up and today's further attempt higher, which so far has not been that overwhelming, we saw the market tackle some significant former supports that had again become overhead resistances, consisting of most of the closely packed moving averages between 1999 to 2012, as well as the concentrated congestion, which I've often spoken about, between 2001 and 2003. These had previously been reasonable supports. The question now is whether they will be reasonable resistances, and I'm not sure of that. All this action has allowed me this week to draw a new dark blue mid-October to late November bullish Andrews pitchfork. The market a little above the dark blue lower time, currently at 1983. I am not in love with this pattern, and I'll be quite prepared to finesse it into a shallower bullish shift pitchfork for the same move, or even retire it completely. This all ties in with my final point. It's a point I've been making here since the start of this year, and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very large and rare annual key reversal down here in LME 3-month lead. Hence, even now, with prices higher than at the start of the year, one should look at all things going forward, this year and beyond, in this metal, in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.